So, Ryan, I got to ask you about gift cards. Over the holidays, of course, get tons of them, birthdays, and, we got to make sure we spend them because get this, there is an estimated $23 billion of unused gift cards floating around. It's a lot of dead money. So, chances are you and Meredith have got tons of gift cards laying around.
Yeah, I'd say we probably have, I don't know, $1 billion worth of gift cards from the size of the stack.
You got a whole drawer full of old gift cards?
Yeah, the thing is, we have a drawer, everybody does, in the kitchen that just kind of collects everything. It's the junk drawer. Well, we have one in the kitchen, we have one in the mudroom, and then there's another little basket she has over on the table as you come into the house. One day she was gone, the kids were gone, and I was like, you know what, I'm gonna clean this stuff out. I'm gonna get rid of all the junk that's in here because it's driving me nuts. And I swear the stack of gift cards is like that thick.
Daddy was happy though, right? He had a bunch of gift cards.
Yeah, a bunch of but you know where they are? Right back in that drawer, unused. The only people in my house that use gift cards as they come in are my daughters because, they get a $20 gift card, $30 gift card from grandma and grandpa or aunts and uncles. When can we go to Target? When can we go to, this ice cream store? When can we go there so I can spend all my money? But yeah, so many gift cards, and that money, like you said, it just sits there. Some of those gift cards we've had for, probably 10 years of the gift cards that, the $20 gift card that we got 10 years ago is certainly not worth as much as it is today, just by lack of inflation.
That's a lot of money, $23 billion just laying around. It's dead money, as you talked about. Let's move that over. Let's transition that over to our money, to our retirement money, in the form of dead money. When you guys do your 401k X-ray and your portfolio protection plan, you guys find a lot of dead money laying around, and that could be just in a regular savings account, so on and so forth. Fill in the blanks on that. Where is this dead money lying around in regards to our retirement plan?
I think that most people, you fund money into your 401k and you set up the allocation. I'm going to have this amount of money going into this mutual fund, this amount of money going to that mutual fund, this going to this much money going into the money market or the stable value fund. And that's one of those things that, it is, a set it and forget it. I might look at it once a year. So when it comes to 401ks, oftentimes people have a lot of money just sitting in their money market account. And most money market accounts are earning 0.05% interest. And, that's not necessarily a bad thing for people to have inside of their 401k. If you're trying to be conservative and you're conscious about how much money you have sitting in the money market account, that's one thing. But if it's, I haven't touched my allocation for 5 or 10 years, well, then that's probably dead money that hasn't earned anything over the last couple of years. But I think that the biggest culprit, I would say, for pretty much anybody, and I've not yelled at, but I've lectured my wife several times, money that's sitting in a savings account. She has money in a local bank. She has like $30,000 sitting in a local bank that's just in her name because in order to add me to it, we have to go to the bank and do all this type of stuff. I've never had time to do, and she doesn't want to deal with it. And the other day, she got her interest statement from them for the entire year on $30,000. I think she earned like $4.75, and she was going ballistic. She goes, this should earn way more money than this. And then she opens one of the other accounts that we have, and she sees how much more money all these other accounts are earning. She's like, what is going on? And I said, well, you have that money sitting there. It is dead money. The money sitting in most checking and savings accounts, are earning less than 1% interest. And, it's a travesty simply because interest rates have been high on, high yield savings accounts, online accounts from, Ally Bank, Discover Bank, SoFi, all those things pay north of 3.5%. And, for money that you have for emergencies, that 3 to 6 months worth of cash that you have sitting in your savings account, that's fine. But when I come across clients that have 100,000, 200,000, just the other day, I was sitting down with some new clients of mine, and we're going through some paperwork, kind of filling out their financial profile. I said, well, how much money do you have in checking and savings? $498,000
Wow.
sitting in a savings account. And I said, what bank is that at? What's the interest rates you're getting? And they were at their local credit union, and that was earning 0.7% interest, $498,000 earning that. And, I asked them why. They said, well, it's not money that, we wanted to risk. It's from when we sold my mom's house. We just put in that account. We thought we'd do something with it later. We thought we wanted to buy, a second home. We were looking at places at the beach, but then we decided not to do it. And so the money just kind of sat there. And I said, all right, well, had you said something, had you done something different with this money, and had you had it in something like a high yield savings account, you would have earned 3.5%, 4% on this money over the past, I don't know, 4 or 5 years. That's like $6,000, $7,000 a year that you would have earned. Whereas you barely earned, $400 on this money per year, every single year. So, what we ended up doing with them, because, we're kind of going through this whole process, talking about what's the best way. Their number one concern was that they want this money to be safe. And just because you want the money to be safe, you want the money to be secure, doesn't mean you have to accept these terrible, terrible interest rates. There are tons of other vehicles that are out there that allow you to have a little bit more of a guaranteed rate, access to the upside of the market while limiting the downside. But, it's one of those things that you don't find out about unless you ask. So if you have money sitting in a savings account, you have $100,000, $200,000, God forbid, you're like my clients that had $498,000 sitting in a savings account earning nothing, I encourage you to give us a call at 866-597-1040, 866-597-1040, and sit down with myself and my team here, and we'll put together your very own portfolio x-ray, and we'll show you where the dead money is hiding in your portfolio. And we will talk about ways we can increase those returns without taking on any excess risk. It's all about making smart choices with your money. And that all starts by giving us a call at 866-597-1040, 866-597-1040, or you can visit us on the web at thesavvyinvestorradio.com, and you can schedule your appointment. There's a button there that says schedule my 15-minute call right online without even having to pick up the phone. That's thesavvyinvestorradio.com.
Brian, when you're talking about looking and finding this dead money, you found it. You're not saying put it all in one other bucket or so on and so forth. You're talking about getting that money and allocating it, putting it in putting different portions in different other vehicles, correct?
Exactly. It's not as if, all right, let's just take all I didn't say that. Let's take all $498,000 and push it into the stock market, because, right, there is a reason, there is a emotional reason you have an amount of money like that sitting in a bank account, because it's safe. I know it's in the bank. I know it's not going to go anywhere to do the stock market. I know I have FDIC protection, up to that $250,000 number. I know that money is safe. And so part of the conversation is, what can we do differently this money where we're not risking the principal? There are fixed annuities out there that are going to pay you 3, 4, maybe even 5%. Those things are like using a CD. With a CD, you buy a 3-year CD, the money's there for 3 years. They pay you X amount of interest rate for that 3-year period. With the fixed annuity, 1 year, 2 year, 3 year, 4 year, 5 year, they pay you X interest rate over that same time period. It's a little bit more because it's not with a bank, it's with an insurance company. There are structured notes out there that you can get. And what those notes say is that let's look at the stock market over a 13-month period or an 18-month period or 2-month period. If the stock market is positive, we give you some percentage of that positive. We give you some set interest rate. But most importantly, you can set these things up so that you have principal protection, meaning that if the stock market goes down, you don't lose any of your money, because they can have up to that 100% protection. It's all about making smart choices with the money. There are life insurance products out there. Now, ignore the fact that I just said the word life insurance. Most people, when they hear life insurance, they think a used car salesman. They just want to put this thing. But there are specific life insurance policies out there that we can use, and we can do it in a low cost manner, because the name of the game is doing as little fees as possible, but we can do it in a way that does that same exact thing. It says, I get access to that upside of the stock market. Stock market goes up, I get the upside of the market, whether it's a percentage of that, whether it's up to a cap or whether it's just a flat percentage. But then I get protected on the downside. Stock market goes down, I don't lose my money. That's the importance of finding ways to take that dead money, looking at other alternatives to just taking that money out and putting it into the stock market, putting it into stocks, putting it into mutual funds, putting it into ETFs. There are other alternatives to where you can safely grow that money without risking that principal. And you owe it to yourself. You owe it to your spouse. You owe it to your family to say, how can I have this money growing as efficiently as I can while not taking on any undue risk? And it all really starts by giving us a call at 866-597-1040, 866-597-1040. And, for my clients that had that 498,000, like you said, we didn't just take it all out and put it in one vehicle. They said, well, we're looking at doing some home improvements. That's going to be about $80,000. I said, okay, fine. Let's take 100,000 of your 498. Let's put it in one of these high yield online savings accounts. That way that money's earning 3.8, I think is the one that they chose to use. That's going to earn 3.8. But let's take the balance, that 398,000, and let's split it up. Let's put some money into some short-term CDs so we're earning some interest rate. Let's take some money and put it into this structured note so we get some upside potential. And then let's look at using this life insurance, because the benefit of the life insurance is that if we do this, we get that upside potential and that downside protection. But most importantly, we can access this money in the future if we do it right in a tax-free manner. So it's all about having that diversification and having those options open to you, because they've been working with another financial advisor for about 10 years. And that money had just been sitting there over the last 5 years because they never thought to even bring it up to him, because they just thought, oh, he's a stock guy. The moment we tell him about it, he's going to tell us to pull that money out and put it in the stock market.
Yeah.
That is not the only option you have. Give us a call at 866-597-1040, 866-597-1040, and sit down with myself, Lawrence, Andrew, Catherine, Sam, a member of my team here at ProStatus. We will put together your very own portfolio x-ray to help you find that dead money in your portfolio and get it working as best as we can for you. 866-597-1040, 866-597-1040. Or, my favorite thing, you go online, thesavvyinvestorradio.com. You click the button there that says schedule my 15-minute call. You set up a time to have a conversation with us without having to pick up the phone and talk to anybody. That's thesavvyinvestorradio.com.
Ryan Herbert, thanks again for your time. As always, helping us out here. If you want more help, if you want more information, of course, you can always call and reach out, or you can go to the Savvy Investor podcast there. Share that with your friends. Take that with you wherever you want. Listen to it whenever you want. And the YouTube page, make sure to like, subscribe, and share this great information with your friends, your family, but make sure that they get the answers that they need. We appreciate your time as always. Again, Ryan, as always, though, you get the final word.
This is Ryan Herbert. Thank you so much for listening to the Savvy Investor Radio Show and podcast. And we will see you, the Savvy Investor, next week.